Okay, I think we can get started after another word from our sponsors there. Good afternoon, ladies and gentlemen, and welcome to the session on the evolution of digital asset regulation. I think we've talked about this topic today in just about every panel that I've been on, but the previous panel was more in the private sector talking about we should not over-regulate. So now we've got a couple people that are interested in regulating here, and we're going to hear the flip side to that coin. And in my time as a regulator, there were a few evolutions, I think, that I saw with payments and with the FinTech industry overall, and now that we're talking about digital assets as well. That the early days of FinTechs, I think everything was just about getting eyeballs, getting more people to look at your site, and that was all that mattered. And I think that has now evolved into a real discussion of profitability as that industry has matured, and we've weeded out a number of players, and now we're in a very serious market. And the digital asset journey has also been fascinating to watch. That the early days of Bitcoin, I think that the traditional finance players were waiting for it to die. It didn't die. So then the traditional finance players, I think, tried to kill it. They couldn't kill it. So now they realize we're going to have to live with it, and we're going to have to embrace it, and we're going to have to regulate it. And that's, I think, really where we are today. So the digital asset industry, I think, is increasingly influencing the global financial landscape. Some people are comfortable, some people are less comfortable, but whether you're comfortable or not, that you have to get on with where we are. So we have a very good panel, I think, this afternoon to talk about a number of these issues. Immediately to my left, we have Husam Habannakeh, the Vice President of Product Commercialization and Digital Assets for Mastercard. He's got extensive experience, obviously, with Mastercard in payments innovation, but also with central bank digital currencies, stable coins, asset tokenization, and open banking. Online, we have, we can see you clearly, Abigail. We have Abigail is the Executive Director and Head of Markets Policy and Consumer Department at the Monetary Authority of Singapore. So welcome to you. She is in charge of a number of things, but very importantly, overall market conduct, outcomes, importantly for investors, and how to shape corporate governance standards, and is also overseeing MoneySense, the financial education program in Singapore, and we'll come back to financial literacy as well. We have Varlam Ebanoidze at the end of the panel, has 20 years of experience in central banking and commercial banking digitalization from Georgia. He's a FinTech innovator and a change facilitator, and you're going to hear a lot of that come out today. And then, last but not least, we have Arutyun Pogosyan, an accomplished entrepreneur, and our paths, we found out, have crossed in past. But he's the CEO of Ataix, Eurasia, a digital asset trading facility registered here in the AFSA. So with that, we'll get started with questions, and I'm going to come, Husam, to you first. Traditionally, when you hear the word payments, you always thought of Mastercard and one other. Since they're not on the panel, I won't mention, but Mastercard and one other. And no industry, I think, in recent times has been more disrupted than payments. And you've been at the forefront of that, and I'm just curious how you see the future of payments, particularly cross-border payments, how that's shaping up for the global participants and Mastercard individually.
Thank you so much, Bryan. And I can't start without first thanking the IFC and the AFSA team on this outstanding event and this amazing audience that we have with us this evening, and the hospitality as well. Now, Bryan, I absolutely agree with you. The payment industry in general have seen the most disruption. I have been in this industry for more than 2 decades, and I have seen it all. The evolution of how technology directly impacts and shapes the payments industry. Now, with your reference to cross-border payments, our users today who are demanding the change and also influencing how they would like to use technology and how they would like to use payments are demanding and expecting that value and money moves at the same speed of information. This expectation was shaped by the evolution and advanced in technology, and at Mastercard being at the forefront of this development and the market leader in the digital payments, we see that we continue to develop our products and services in order to meet with this demand and to address the expectations of the consumers and businesses. For example, we are investing heavily in developing the infrastructures and rails for cross-border payments with Mastercard cross-border services, and we are identifying faster and more efficient rails that can carry the value between participants in the cross-border transactions. In addition, we are also exploring how the stablecoin or blockchain technology can enable this transformation and accelerate it, leveraging, of course, a compliant and regulated rails that are available in those jurisdictions. Thank you.
Very good. Thanks for that, Husam. Arutyun, I'm going to come to you next. You represent a virtual asset exchange here, and similar to my question to Husam, that how do you view the future of virtual asset exchanges? You can talk about your own experience or just in a global sense. Are there room for more exchanges? Do we have enough? And how do you compete?
Thank you very much, Bryan. I am not a certified futurist, but I think the future is bright.
Uncertified's okay here. Yeah.
The future is bright. I think it looks like the future of the crypto exchanges, like we say, will be totally different than it is now, because we will be moving towards from the regular trading platforms towards more to full-scale financial ecosystem, which is a merging of digital asset economy with the traditional finances. There will be more tokenization, custodian, the ETFs backed by Bitcoin, Solana, etc., like the one Fonte Capital launched recently. AI, of course, will change the landscape totally. I think there will be AI agents, which everybody knows that let's say, onboarding on exchanges is a cumbersome issue, yes. Nobody has the desire to go and register to pass the KYC. I think AI will help to enhance this process and make it smoother and very quick. Going forward to exchanges, I think there will be a lot of changes in global crypto industry. Some exchanges will disappear. There will be a lot of mergers and acquisitions. But the ones you say, the global exchanges like Binance, Coinbase, they will continue servicing the large retail and institutional clients. But there is always a place for regional exchanges, regional digital asset trading facilities. The how do we compete with them? First, there are two things that we shouldn't do. First thing is never copy global exchanges. You need to be unique. The second one, never compete with the giants. So we are wise enough not to compete with Binance and Coinbase. We are partnering with them in terms of liquidity and getting different products through them, etc. So we are cooperating with them. But as a regional exchange, we have our own strengths. So we think that we know deeper their local regulation, local compliance. We have broader contacts with banks, bank rails. We know better the local and regional clients, so we can compete with them. And we go to niche products, niche clients. In such way, we try to compete with them and get a place in the region. Thank you.
I'm going to pick up on one point that you said there, because this is directly in the regulatory space, I think, where you talked about onboarding a client is difficult, AI can help. And I think in a previous panel today, we had a deputy governor from the National Bank of Kazakhstan talking about that eKYC process. And, you know, somebody who has an ability to digitally carry their identification package with them. How do you see that working?
Actually, we are working on that. I think very soon we will have our AI agent, which will help clients to onboard, and then it will also help to buy crypto, actually, using AI agents. So you will see it very soon.
Very good. AI is everywhere, that's for sure. Abigail, I'm going to come to you now. Welcome to Astana. You're with MAS. MAS is traditionally thought of as one of the most progressive tech-savvy regulators around the world. Singapore FinTech Festival has been a hallmark, I think, around the world of where FinTech is going, where digital assets are going. We appreciate the role that MAS plays in the world. But I wonder if you could share with us some of MAS's current priorities and how you see digital asset regulation working in Singapore.
Thanks, Bryan. Just to check, can you hear me okay?
Yes, we hear you.
Fantastic. Thank you very much for having me here on the panel. Grateful for the opportunity to engage everyone in the room and to share a little bit more about Singapore's regime and how we look at crypto and digital assets. So Bryan, you're right. I think Singapore has been known to be really innovative, and we've been really leaning into finance and fintech for quite a few years now. And I hope you and everyone else, mark the dates for early November to come back down to Singapore for the FinTech Festival. I want to say, I think we've always been really supportive of innovation. And in terms of what areas of innovation that we're really focused on in the digital asset space, I think what we're really excited about is the distributed ledger technology. So there's a lot of work recently going around about tokenization. And I think people who are following this space would find names such as Project Guardian or the project on Global Layer 1 quite familiar. So in terms of pushing or an innovation, pushing on how it can actually help financial services and products expand and develop, do things maybe cheaper, better, faster, usually, we are really quite behind it. I think the other thing, though, kind of like as a pair to this, is when it comes to speculative or very volatile instruments. So, for example, cryptocurrency, I think we've seen really quite a checkered history when it comes to cryptocurrency. I mean, from the early 2017s when you hear ICOs, all the way to crypto boom, crypto winter, and then now it's kind of like a swinging market. What we at the MES in Singapore are really focused on and concerned about is whether there could be consumer harm. So while we really support innovation and do actually, as you've seen, sponsors projects and industry in looking into blockchain or DLT. But when it comes to retail investors, especially the men on the street, when they're thinking about cryptocurrency, we've gone out to say that you have to be really careful and understand what it is that you're putting your money in. It's not a traditional stock or share, or not an ETF. You have to understand what it's about. It's new, it's volatile, it's speculative. Some of these tokens actually may or may not have fundamentals. So that's kind of like a dual message that we're kind of like putting forward. I mean, it's like fire, right? With technology, blockchain technology, it can be used for really useful things. And I think in the payments space, we've seen, for example, Mastercard, rolling out things to do with settlement and payment rails using the blockchain quite successfully. But at the same time, like technology can be used for nefarious ways. In my work in the MAS, we've also seen cryptocurrencies being used in scams, Ponzi schemes, rug pulls. So I think it's that twin message that we're being quite clear about in Singapore and putting that out well. Maybe just give a little bit about the regulatory framework, about how we think about digital assets. So I think first off, we tend to take a very tech neutral approach. So earlier I talked a little bit about the 2017 ICO boom. They're called initial coin offerings. So the first thing you think about is IPOs. And so we had to look at it. Are these or are these not securities? What are these creatures? And if you look at the token itself, at that time, a lot of it wasn't actually IPO-like. It could be a project. It could be actually membership, right? In effect, a membership to a club, to a gaming club, or maybe rewards points for participating in certain activities. So at that time in 2017, we actually put out a guide to say that for the MAS, we're taking a tech-neutral approach. Just because it's issued in a different form, if it's issued as a token, doesn't automatically make it not a security and not caught by regulation. Neither does it make it automatically a security and therefore caught. So what we do is we take a look-through approach. We look at the token, what it's supposed to give you, what are the economic benefits underlying that. So if it's in fact structured like a share in a company, like equity, or if that token that is being offered is in fact maybe like an IOU, a loan or a bond, then we said that our existing securities laws would apply. So that makes a lot of sense and it was easy. Then of course there are other types of tokens that may actually just represent a club membership. And that of course then wouldn't attract capital markets or securities regulation. So that was a first thing that we laid out quite early. The second thing I think that we've looked at in the intervening years, almost 10 years now, where technology has really come up and you've got a lot of new products and new ways of distributing these products, is that at the end of the day, we're going to look and identify and assess the underlying risks that whatever new product or new process will present. And at the end of the day, we seek to actually address those risks in a proportionate and appropriate way. So for us, with securities regulators around the world, we always say basically same activity, same risks, and then you have a same regulatory treatment and you want the same policy outcome. So I think that's how we've been thinking about it. Happy to share a little bit more about what we do and what our rules are later on as well. Thanks.
Thank you very much, Abigail, and I will come back to what your rules are, and I'm particularly interested in a second question on the financial literacy front and how you're protecting consumers, because that's something that doesn't get talked about enough, but we will talk about it here today. Varlam, I'm going to come to you next. I wonder if you could elaborate a bit on the National Bank of Georgia approach toward digital assets. And you've got great experience, I think, in the CBDC experiments that you're doing, tokenized deposit sandbox that you're running. And in our discussions, you've had some pretty interesting observations on the differences between traditional finance and decentralized finance and how to regulate the virtual asset service providers. So over to you.
Thank you, Bryan. Pleasure to be part of such a diverse panel. First of all, I need to disappoint you. I'm not a supporter of over-regulation. I think my mission is to regulate smart and to think about regulatory-driven innovations. I want to make a little bit historical analogy. So We are having very diverse panel, and we are having company which can be considered one of the first fintechs in the world, the one which has been invented way before the internet was invented. So probably that time when Mastercard was invented in the 60s, regulators would have a lot of time to design the processes and to think about the secure design of the processes, lots of clearing and messaging systems beside. And we need to understand that genesis of development internet and internet-based technologies like tokenization, programmability, smart contracts was very different. So only way to catch up with this and to regulate, I would say, is learning by doing approach or sandbox approach. And this is how we prioritize in our overall fintech development strategy. We have 3 layers. Number 1 layer in our strategy is so-called regulatory-driven innovation, and the example of regulatory-driven innovation can be open banking. Then second layer in our strategy is so-called technology-driven innovation. In parallel of upgrading existing payment rails like RTGS or instant payments, which are already conventional, we want to focus also on additional layer of payment and to bring something additional, like we look to technology-driven innovation. One of the motivations for our CBDC project was that we looked at it as a technology-driven innovation. Programmability, smart contracts, tokenization, atomic settlements, where the promising technologies which could redefine the existing architecture. So we did our best to map those promising technologies with the relevant use cases for Georgian context. And with minimum resources, we were able to transit from why CBDC to how CBDC stage. Because use cases we have designed, I would compare them with the modeling exercise, kind of simplification of reality. For example, one of the use cases in our CBDC project, we had oriented to test programmability feature for our own employees within the central bank. But with the extrapolation of this technology, you can think about wider use case of automatic tax collection based on the similar technologies, for example. And we call this concept CBDC as a platform. Why? Again, it is linked with our overall fintech development strategy. The most developed industry in Georgia after collapse of Soviet Union is banking industry. In last 30 years, banking has been developed in a very rapid manner, and our 2 major banks especially are acting like big fintechs. In these circumstances, it is quite hard to think about new entrants, and internally we think that our mission is to disrupt the entry barriers for new entrants. This was the concept under our thinking about CBDC as a platform. When you create a platform for experimentation on those new underlying technologies. And externally, since we are a small country, we don't have so-called power of demographics. We initially think about interoperability of our open banking solutions, interoperability of our CBDC projects, and we think that there is a clear link between ongoing positive trend in the middle corridor, including because of geopolitics, and how fintech and including blockchain technologies can facilitate and accelerate actually ongoing trend in trade. So, for example, you can transfer goods from Kazakhstan to Georgia in 3 days but still wait for the payment for next days. And interoperability by design and underlying technologies have potential to actually revolutionize these processes and accelerate the ongoing positive trends in the real economy. So in the spirit of collaboration and regional cooperation around those technologies. Maybe it's a kind of opportunity window for this region. Because, you know, just a couple of months ago, euro celebrated 35 years of existence. And I remember then I was hearing in European Parliament about digital euro. The board member said that in 25 years, you can trade within the EU without having any barriers, trade for free. But when it comes to paying for this trade, euro in 25 years arrived nowhere. So this is technology-driven innovation which brings revolutionary potential. Maybe it's a good timing to look at those technologies and interoperability as an opportunity window for our region. But history also teaches us that besides having technical interoperability, the similar importance is so-called regulatory interoperability. So for example, to bring analogy, more than 80 countries now they have instant payment in place, but very few instant payment talks to each other, despite having similar messaging standards. But we have very good analogies in Southeast Asian countries. Singapore's are pioneering innovation in the region, and it's a great analogy to bring our region how interoperable payment solutions could facilitate the acceleration of real economic trends.
Fantastic. And by the way, I'm not against, I'm not for all regulation either, and I think the AFC here has done a fantastic job of getting the right balance, of getting the right regulation. Not easy, finding your point, but absolutely getting the right regulation is important. Husam, I'm going to come to you, and Arutyun, I'm going to ask you both a similar question, I guess. That a lot of discussion now on the topic of stablecoin. That pretty much every conference you either have some discussion of AI, some discussion of stablecoin, or both. So that is becoming a very effective on and off ramp for digital assets. And how do you see stablecoin affecting your business? Is Mastercard against, pro, operating with, collaborating with? How does it work?
Thank you, Bryan. I think, first of all, we see stablecoin as a great opportunity to introduce efficiency to the existing payments and services at Mastercard. When we talk about stablecoin, we talk about stablecoins that are compliant and regulated, that are licensed by and supervised by regulators, where the treasury, where the audit, where it's all in place, including consumer protection and business protection. And this is what gives the confidence to us and also to our participants to participate and leverage this rail. Now, the way we do it, I will simply classify it in spending the stablecoin. Stablecoin by nature being a form of crypto, it does not have this wide network of acceptance. You cannot go to a coffee shop and pay with stablecoin. So what we have done is that we bridged the stablecoin with a traditional financial system with existing compliant and regulated network, like the card network, where you can simply now, with using a stablecoin-backed card, to buy actually a coffee with your stablecoin instantly. And the transaction will cross over from one regulated jurisdiction, which is the digital asset jurisdiction, into another regulated scope, which is the card rail scope, seamlessly and instantly, bringing this convenience to consumers. Another use case where stablecoin have been integrated into our services is settlement. We now enable our participants, whether issuers or acquirers, to settle their obligations in stablecoin, again, compliant regulated stablecoins, where this is allowed by the regulators. And then acquirers can subsequently continue this settlement cycle in stablecoin to their merchants, enabling the merchant to get their money faster and cheaper and in a more dynamic way. Existing rails that we have, like the Mastercard Move, the cross-border, also will in turn start leveraging the stablecoin corridors, especially in corridors where we have seen historically more expensive or slower fiat movement, where stablecoin can actually solve and complement the use case. Furthermore, we now have announced our intention to participate in the Global Dollar Network, which is a consortium for issuing a stablecoin led by Paxos in the US, where Mastercard will help participants to get access to the USDG, which means that in the future, to issue a stablecoin, you don't have to invest in infrastructure and go through the licensing and go through. There is a licensed entity. All you have to do is place collateral or treasury, and then you get access to the stablecoin. And that's very important because having multiple stablecoins can be very difficult, especially to the point of interoperability. While we see a future where a local currency stablecoin that is interoperable and universal, that can be used by all financial services members in the jurisdiction, to be more optimal and easier to integrate with. I must also comment on 2 points. One is the eKYC. We have recently worked with Ataix and Intibix on launching the Mastercard Crypto Credential Network, which helps to ensure that there is a trust in the VASP ecosystem, where users, after being KYC'd by the obliged entities, can have aliases that can replace their blockchain addresses. So, for example, if I have 100 wallet at Ataix, I have only one alias, and then users of other VASPs participant in the same network, they can know that my alias, Husam, has been KYC'd by a licensed VASP, and they can only use my alias to send me all types of assets. And the system will be able to resolve to the correct asset. Thank you.
Thank you very much, and that was a lot of very good information there. Arutyun, do you have anything to add to that?
The same
that's
question.
Really good. Yeah, same question.
Thank you, Bryan. Thank you, Husam, for mentioning crypto credentials. Great project, actually. We also are doing a crypto card with Mastercard. Will be launched very soon. Stable coins are the most important on and off ramp. For our clients, it's the bridge between the traditional finances to digital economy. I think the global daily volumes for stablecoin now, it's one of the most important digital assets, because daily volumes are around $300 billion. And on the peak days, it can reach to 400, 500 billion. Of course, we have a very great also project where from our partners, Anchorex, yeah, it's a stable coin backed by yuan and listed on Ataix. I think this has a very, very great future. Since we have a regulator here, I think it's a very good time for the regulator to show the leadership, to embrace the stable coins, and to make a clear and transparent regulation. And I think there will be a boom very soon in Kazakhstan for stable coins.
Fantastic. Well, that was a very good segue to you, Abigail, making regulation clear, and very importantly, making the risk clear to the consumers of what these new products bring. So I wonder if you could elaborate a bit about that.
Thanks, Bryan. I just want to say, I think the interest in stablecoins is very real. It's been burgeoning, I think, the interest and the talk about stablecoins, what it means, and the use cases for it. I think we've kind of like regulatorily come to an agreement about what are stablecoins and for a time, so-called stablecoins. I think in terms of clarity, globally, you're starting to see a convergence in regulators around the world, drawing out clearer parameters, right, about what is a real stable coin. Because not all stable coins are kind of like made equal. So you have some that are actually more algorithmic, some are like a basket of certain different kind of assets. So for Singapore, we've put up for consultation to give regulatory clarity, which we know the industry would like. It's an MAS kind of like regulated stablecoin. So for that, we regulate mainly for value stability. So I think the key risks that we had in mind when talking about the MAS single currency stablecoin framework is to ensure that there's value stability. There are key requirements about what kind of currency can be used, but at the end of the day, the requirements like being able to redeem at par, not having the peg broken. And for these, then they would be able to get the label of MAS regulated stablecoins. So then segueing back into consumer education, so that's kind of like what we seek to do. We know that there are a lot of stable coins out there, but then how do consumers know what it means, right? Is it something that I can depend on? Is it something that is going to be volatile or something that's truly stable? So if it's an MES regulated stablecoin, there will be these safeguards in place. So currently, we don't ban other types of stablecoin for being used or circulated in Singapore. But if it's not an MES regulated stablecoin, they can't be labeled, of course, as MES regulated stablecoin. And the regulatory requirements and distribution frictions, which I'll talk about in a while, apply to these non-MES regulated stablecoins. So that's kind of like how we are trying to make that clear to consumers. So moving, I think, into more traditional cryptocurrency space, talking about risks, I think it's letting people know that this is not the same as like a security or bond. I think that was very early on something that we needed people to understand. We also realized that actually a lot of the retail consumers were dealing with entities that might be offshore or entities that in the early days weren't really already regulated in Singapore. So the early warnings was to say that you're dealing with unregulated entities. There would be no recourse. There are no MAS rules regarding how they distribute this to you. Your avenues of recourse might be limited. But of course, since 2019, 2020, we basically put together a Payment Services Act, where we regulate payment services, we regulate payment entities, wallets, remittance houses, all the way to money changers. And in there, we also regulate what we call digital payment tokens. So I think when we wrote that, we had like things like Bitcoin and Ether in mind. So when we first wrote those rules, the key risks was AML, CFT risks, also technology risks, because a lot of these tokens were, of course, distributed off technological platforms. When these then started to gain a little bit of popularity, and we realized that there were advertisements for crypto popping up online and on bus stops, and I think consumers were starting to get hurt because they would put in a lot of money, not really understanding the risks and how volatile it could be, and they would lose money. So early on, maybe in, I think it was early 2020, we put actually a ban on advertising. So if you walk around Singapore, you won't be seeing crypto ads, unlike other jurisdictions. So that ban is still in place for now. The other thing that we had a key risk was segregation risks. I think we've come a long way, and I believe in really communicating and cooperating with the crypto industry. And I think when we said, look, there is a global movement in order to see what kind of regulations can be put in place, mainly for retail consumers. I mean, when it comes to sophisticated consumers, or when it comes to institutional consumers, I mean, usually as securities regulators, it's very, very light touch. So most of our focus was on retail guys, right? The people on the streets who might not exactly know what they're getting into.
Yeah,
So we actually worked
Abigail,
with the industry. We consulted industry associations on that as well.
Abigail, I'm going to have to give Varlam, we only got 2 minutes left. But you were on a roll there, but that's a lot of very good information. And again, MAS leads the world, I think, in protecting consumers. And that's a trust issue with the government of Singapore. So thank you for that. Varlam, I want to come to you.
Thank
we
you.
only have a couple minutes left here of
Isn't
that.
it last panel? I thought it's the last panel, no? So we have time. I'm joking.
Give it a try. Yeah?
Yeah, no problem. So what's the question about?
Well, we're going to continue on this, I think, financial literacy point and consumer protection, really, and the regulations, and who's responsible for educating the consumer here.
I think also it's important to whom you communicate. I think it doesn't make big sense to have expectation that end user would understand difference between token standard ERC20 versus ERC3643. And I think Sandbox, again, is a great tool of two-way learning. You, as a regulator, getting educated about new business models which are untested, and kind of a B2B way of learning from each other with business. We spent a lot of time communicating with this sector and spending time on spreading our key messages with FinTech to make sure that what is the maximum risk appetite from our side, and I think end user in the end is interested in better service. So for end user, key is the better and cheaper service, and we need to be focused on educating sector participant and the market participants. That's our observation.
Fantastic.
Thank you.
Well, thank you, everybody. Thank you, ladies and gentlemen, for listening to what was, I think, an incredibly interesting panel. So join me in thanking the panelists. And Abigail, you're welcome to Astana next year. Okay.